Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by the one, the only Jimmie Lenz. Jimmie, how you doing, man?
I'm pretty good. I'm kind of busy here, Lee. I don't know what the heck's going on. Middle of the semester, and I feel like it's the first week of the semester.
It's not even the middle.
Things
We're like
going
a
on
month
here.
in. Yeah,
we're going to talk about a big one today. But man, it's just like it's nonstop. But the one thing we do have going for us, really nice fall weather here.
so nice, so nice.
Isn't it?
It's like summer temperatures without the humidity.
Without the humidity.
You know? It's
I don't know.
low
These would be
80s,
nice
mid
summer. This
80s.
would be a nice summer if there was really like this. It's like
Well, these
80
are Midwest
degrees
summers. These are the summers like this is like July in Minnesota.
Yeah, this is Midwest summers, maybe.
Yeah, for sure. Well, look, let's dive into it. We've been teasing today's episode for a few weeks now, Jimmie, and we're finally doing it. So today we are doing a deep dive into the S1 filing of Gemini, the crypto exchange Gemini, also known as Gemini Space Station, which I think
Where
they
the heck,
changed.
Gemini Space Stations? That sounds like something my 4-year-old would come up with.
Well, it's because crypto is going to be interplanetary, Jimmie. Come on.
Oh, that's what it is.
When we establish a colony on Mars, what do you think we're going to use to pay for things?
Apparently.
Yeah. So come on, common sense here. So look, let's just do a little overview here because the IPO's already happened.
Yeah, IPO's already happened.
So we kind of have the benefit of a little bit of hindsight here, and we'll provide that. So look, here's the context. So Gemini offered roughly 17 million shares of Class A common stock. Their S1 originally had a $17 to $19 price range. They later upped that to $24 to $26, and then the final pricing was at $28. So this was on Thursday evening, 9/11, before the shares traded publicly on the NASDAQ on Friday, September 12th. Now, holders of the Class A common stock will collectively hold 5.3% of the combined voting power in Gemini. The remaining, roughly 95%, will be held by the twins, by Cameron and Tyler Winklevoss. Okay, so Gemini capped the value of the offering at $425 million. Ultimately, 15.2 million shares were sold. The underwriters have an option to sell more within 30 days. And this valued Gemini roughly $3.3 billion before trading began. Now, the S1 is very clear that they have no plans to pay dividends. And then up to 30.
What do they pay them with?
Well, exactly. That's what we're going to get into. up to 30% of the shares were reserved for retail investors through various retail brokerage firms, including Robinhood. Okay, so this was all before it opened for trading on September 12th. Okay,
right.
So Friday, September 12th, the stock opens at $37, a 32% premium to the offer price. Shares climbed as high as almost $46 during intraday trading before settling at $32, which is still 14% above the IPO level.
Oh, and by the way, they're now trading at half of that.
Now, $23, basically.
$23.
So the market, it's interesting. Like when you compare it to Circle, which in the first couple of weeks after it listed, that shot up. Now it's come back down, but Gemini was quite quick.
Well, Circle was making money though too. Circle actually has profits.
Yeah, exactly. So look, let's just. So that's the setup. Okay, that's the setup. The stock is down. Okay, look, Jimmie, let's just cut to the chase here. Okay, this is a company that, as far as we can tell from the S1, and because they're a smaller company, they only had to disclose 2 years prior financials. But
and folks, those 2 years are not 2 good years.
So the company has never made money.
Nope.
Okay, it has never made money, as far as we can tell. And Jimmie, as far as I can tell, the company has been kept afloat by an incredible amount of related party loans provided by the Winklevoss twins.
Yep.
And we'll get into that. But the Winklevoss twins have lent a lot of crypto assets, Bitcoin and ETH, to the platform, to their company Gemini, and they're using that to fund their operations. So that's I don't get it. I don't see, there's no there as far as I can tell. And the company, when I read the S1, has no clear plans to get to profitability, Jimmie.
No.
Jimmie.
No. there were a lot of things in the S1 that kind of, 70 pages of risk factors. Well, companies always have a lot of risk factors. 70 pages for a company like this, seemed extreme even in this these circumstances.
Yeah.
The fact that they've never been profitable, they have no PE, so we can't talk about price to earnings ratio or any of those kinds of things because there is no earnings.
Yeah.
They're being kept afloat by loans and things like that. And then I started looking at their business a little bit more. So the vast majority of their business is their trading their exchange, right?
We'll get into that. Yep.
And I don't know if you looked at the fine print on that, but the vast majority of the exchange users are retail. Now they push the institutional on. We can do we can hold assets, and we can custody things. This is like over 90% of their business is retail business on the exchange. These are just commissions from retail clients.
Yeah.
And we know retail clients are the most fickle there are, right? The next greatest thing comes along and they're gone.
Yeah. It's a great point. And, so here's some background stats before we kind of get into some of the specifics here. So as of July 31st, Gemini had 550,000 what they call MTUs, monthly transacting users. Okay, and this is sort of a key metric that crypto exchanges have sort of settled on, which is how many people have unique individuals have used the platform in some capacity over the past month. And look, there's all sorts of kind of issues with that number.
There's a lot of games that can be played with those numbers.
A lot of games that can play. So they have 550,000. They service approximately 10,000 institutions in over 60 countries. They have 21 billion of assets on our platform. They have over $285 billion in lifetime trading volume and over $830 billion in transfers processed on our platform. Now, let's focus on that trading volume number, 285 billion lifetime trading volume. By comparison, folks, the daily trading volume.
For perspective, Coinbase does more than that in a quarter.
The daily trading volume on the New York Stock Exchange is between 100 and 150 billion dollars.
Yeah.
So every single day on the NYSE, they are trading roughly half of Gemini's all-time trading volume. Okay.
Yeah.
Now, obviously, the stock market's a lot bigger, right? But just to kind of give you a point of comparison, as you said, Jimmie, their revenue is primarily generated from transaction fees earned on volume-based trades across retail and institutional users. As you said, it leans highly retail.
Right.
So for the year ended December 31st, 2024, those transaction revenues, roughly 70% of total company revenue. Okay. So it's just a place to buy and sell crypto. They get a fee every time people do that. And that is how they make the majority of their revenue, right?
Yeah.
70%. However, last year they still lost $158 million.
$150 million.
And they use this non-GAAP metric, which we can get into. There's a lot of problems there. Adjusted EBITDA. So adjusted EBITDA of negative $13.2 million. And, they say like, look, adjusted EBITDA is kind of more of a reflection of our core operating business. So even on that, they lost numbers. And that's a highly massaged numbers. This year is looking even worse, Jimmie. So the first 6 months ended June 30th, 2025, right? They had a loss of $282.5 million.
Okay? They could eclipse their loss of 2 years ago.
Yeah. And adjusted EBITDA of negative $113.5 million. So it is not a good year
I would say,
for Gemini at all here.
No, it's not. And I would say, Lee, that, while they're saying, they say it in S1 over and over again, we see, crypto is the future and crypto doing this and a lot more crypto going. Yeah. Well, it's also getting a lot more competitive. And when things get competitive, margins get squeezed. And if you weren't making money before, they start squeezing those margins. How are you going to make money now? Well, you're not.
Yeah. And that's what I kept coming back to, which is like, what is their path forward here? How do they get to profitability? How do they differentiate themselves in a market where you just said every TradFi firm is getting into crypto?
Yeah.
Right.
How are you going to compete against
it used to be that places? there was in the US, you had limited options if you wanted to buy crypto. You could go to
Mhm.
Gemini, Coinbase, Kraken. There wasn't a lot. Now you can go anywhere, right? You can get, I think Schwab is going to soon let you start buying, spot crypto. Okay.
You
Obviously,
can with
Robinhood, you
Schwab,
can get the
Robinhood.
ETFs.
You've been able to
Yeah.
at Fidelity.
Fidelity.
You can. I mean, these are the biggest
It's,
places. These are the biggest players there are in the
yeah.
world. And
Yeah.
yeah, it's going to be very, very difficult.
PayPal, you can buy crypto on PayPal. So
Yeah.
there are so many places for folks to buy and sell crypto now, and including platforms that just have far more scale
Yeah.
than Gemini. And so I just don't know like how they're going to compete at all, because it's not as if they have this vision or this plan to diversify
No.
their revenue base. I mean, when you
Well,
read the S1,
the credit card, that's what they talked about. Remember the credit card?
well, the
That's
credit
one.
card, and yeah, and like we'll get into the credit card, but they don't do, and they kind of hide some of these numbers, and they don't break out a lot of things. And I have some red flags here, but I think they're probably losing money on the credit card right now.
Probably.
Because of the promotional materials and the rewards, that they're paying. I mean, they're paying people, these Bitcoin rewards.
To use the credit card.
So we'll get into that. So yeah, it's the credit card. It's, we're going to start listing event contracts. Well, guess what? Everyone's doing that now.
Everybody's doing that. Yeah.
We're going to do derivatives, perpetuals. Guess what? Everyone's doing that too. So it's not like Coinbase where they have they don't have like a base equivalent.
No.
Okay. They have this crappy little NFT platform that's worse this year than it was the year before. So I just don't see a path to profitability here, which begs the question why the stock was worth anything at all.
I can't figure it out. I cannot figure it out. I mean, I know that they said they put aside a bunch of shares for retail. I'm guessing retail were the only people that bought these things, or continue to buy these things. I mean, I can't imagine anybody else buying these, and it's more of a, almost like a meme type thing than anything else.
Yeah. So, okay, let's break down the business. Let's break down the business.
Yeah.
Okay, so a couple components of the business. We already talked about the main one, the exchange. Okay. They have an over-the-counter desk.
Yeah.
Okay? They provide institutional custodial services, right? And they get fees off that. They do have their own stablecoin, which I kind of forgot about, honestly.
Yeah, I know.
But they do have GUSD. They provide staking. Okay. You mentioned the credit card. And then they have NFT kind of minting platform where you can buy and sell NFTs.
That's kind of last year.
Nifty Gateway Studios. Okay. So let's just go in order there. So the exchange transaction fees. Okay. What are they? So over the period of the first 6 months of 2025, for retail users, those fees range from 1% to 1.3% per transaction. Okay. So if you're buying $100 worth of Bitcoin, you're paying $1, plus in fees. Okay. So depending on the mix of volume. Okay. Institutional fees, they're lower, not surprising, right? So 0.02 to 0.03. Okay. We already said, look, 67% of the revenue is coming from those exchange fees. Okay.
Yeah.
Now they also say, Jimmie, that is Bitcoin and ETH. Right. I mean, it's like a two-man show, right?
Yeah.
Bitcoin and ETH are the predominant assets traded on that platform. They mentioned Solana was also another one. Okay. So look, here's the trading volume.
Okay. Go ahead with this. I want to ask you.
Here's the trading volume because I'm looking at the trading volume numbers.
Yeah.
Okay. So for I'm just doing year end. They do break it out for 6 months ended June 30th, but I think a full year is helpful. Okay, trading volume. This is in billions of dollars, Jimmie. Okay, so retail, $7 billion in retail trading volume, 2024. Institutional, $31.6 billion in retail trading volume. Now they don't break down the fee, like the revenue, right? So that's just the volume. So this is where I was confused, and I think you kind of did the math in your head, Jimmie. When you look at those percentages, like I think they're actually still making more from retail, even though the fees are, even though the volume is a lot smaller for retail. Okay,
right.
So that's the total trading volume. Okay, by crypto asset, by type of asset. Okay, Bitcoin. $23.6 billion in 2024. Ether, $7.7 billion. Everything else, all other crypto assets, $7.3 billion. Now, the final note before I turn over to you, Jimmie, on the trading volumes here. Big dramatic. Did you notice how big the spike in institutional volume was from 2023 to 2024?
Yeah.
So I mentioned it was $31.6 billion for institutional volume in 2024. That same number for 2023, $8.9 billion. Okay. So that is, over $20 billion year-over-year growth in institutional volume. And there was no, I didn't see an explanation for why that was at all. So I don't know what's going on here.
I was thinking it had something to do with the custody.
Yeah, maybe. They didn't map it that well.
With custody. Because they're custodying institutional assets. That's what I was thinking.
Okay. Yeah, that could be
something to do with that. I think, when you kind of take this whole thing apart and you start looking at it and you start seeing the volumes, you start comparing them to, let's face it, they have a lot of competitors, but it's easy to kind of look at Coinbase, right? Because they do similar things. Although Coinbase lists a lot more things, and they have they're a lot bigger, right? They're just a lot bigger. But the thing that got me when I was reading through, the S1, and I was reading through, all the statements at the beginning, which are kind of marketing statements to some extent, they kept touting their innovation, their innovation, their innovation, their innovation. I don't see anything innovative here. I mean, credit cards, that was one of the big things that they were touting. Credit cards with crypto rewards. It's like, how long have rewards cards been around? 20 years? I mean, I didn't see anything here that said, wow, this is an innovative company. I mean, I deal with a lot of innovative companies. I would not put them even on the list. I just don't see. Yeah. If that's what you're staking the company on is your innovation and new things, I was like, where are they? I mean, I kept reading through it and think they're going to announce something. They're going to say something, but I never saw anything.
They have no moat. There's no moat there.
Yeah.
There's nothing that they're doing that other people aren't doing. Like you said, okay, you issue a credit card that pays rewards in Bitcoin. Anyone like Coinbase can do that. I think they are actually going to do that. So that's not protecting you at all. So, it's the exchange business. Okay, let's look at the revenue then. Okay, so let's just say the first 6 months. Okay. The exchange business made roughly $44 million.
Right.
Okay. $44 million. Now, as I said earlier, how much of that was from retail to institutions? We don't know. We can kind of do some back of the envelope math.
I was going to say, we can, that's not hard to figure out, but.
So most of the revenue, right, is coming from the exchange business. Okay. $44 million in first 6 months, 2025. That is down from the first 6 months of 2024. So they're not even they're trending in the wrong direction. And so they have this note that exchange revenue decreased by roughly $7 million for the first 6 months of this year compared to last year, primarily due to $7 million in lower average fee rates on retail,
right,
as well as a $1.5 million increase in incentive credits provided to market makers, which reduced net trading fees. So as soon as I saw that, I was like, okay, what is going on here with these market makers? And there was another flag. I don't know if you picked up on this, Jimmie, because I was looking, okay, where else do they talk about these incentive credits for market makers elsewhere? This is the only mention. So it's only mentioned once. And I'm like, well, how much are they paying these market makers? And elsewhere, did you notice in the risk factors, Jimmie, that they called out their reliance on a relatively small number of market makers? So we're jumping ahead a little bit to the risk factors, but since we're on the topic, they say a significant amount of the trading volume on their platform is derived from a relatively small number of institutional market makers. And the loss of these market makers or a reduction in their trading volume could have an adverse effect on our business and operating results. Okay. They say that same number of small institutional market makers have historically accounted for around half, Jimmie, of the total trading volume on their platform. So, is this just kind of it's almost like the proliferation of stock exchanges, right? Where they're just selling access. What is going on? Is this just it seems as though if you're a retail trader on Gemini, you are getting sniped
Yeah.
by market makers here.
Well, I looked at the amount that they were paying for like sales and marketing, and I'm thinking this was probably they're falling under sales and marketing. Sales and marketing over tripled from 24 to 25.
Yeah.
Over tripled. If you look at the the other thing that really went up a fair amount from 24 to 25, salaries and compensation.
Yeah.
Those are the only things that are rising, are their costs. They're I just don't know how they will continue. Their revenues are falling. It's a more competitive market as this becomes, as the environment becomes more and more friendly. You're going to have more and more people that are entering this. And can you imagine if a couple of the big banks enter this market? These guys are they do custody for a living. I mean, the big banks, right?
Yeah.
I mean, they know how to do it really, really well. I mean, I just don't know how these guys survive. I really don't.
I don't either. And so you mentioned, let's take a look at the expense side.
Yeah.
So you mentioned for the first 6 months of this year, salaries and compensation was the single largest expense item, $71 million.
Yep.
Okay. That one item exceeds the company's total revenue for the first 6 months of this year. Okay. So the total revenue was a little under $69 million. So $71 million they paid in salaries and compensation. Now, look, I know there's a war for tech talent out there. You have to pay for good people. But this is just not sustainable. And by the way, that number, Jimmie, does not include stock-based compensation.
Right.
Right. Which they, and that's part of that adjusted EBITDA number that they're reporting too.
Yeah.
So that does not include stock-based compensation as far as I can tell. And then you mentioned sales and marketing between, so 2024,
right.
The first 6 months, they spent $7 million. The first 6 months of this year, they've spent $25 million.
And I'm thinking a lot of that
sales and marketing.
I think a lot of that is probably, things they're doing with market makers and stuff like that. I don't know. I don't know how they're categorizing that, but I'm guessing some of that is things like that.
So they say key drivers of the increase include agency fees and sponsorship for out-of-home campaigns and targeted event-based marketing at BTC Vegas and the Digital Asset Summit. So I guess they're sponsoring conferences. Hello, folks. Digital Assets at Duke. Give us a call.
Yeah.
We'd love to have Gemini as a sponsor, even though we're trashing your company right now. And then they say additionally, credit card crypto rewards and crypto referral incentives increased by roughly $7 million.
Yeah.
Okay. In the first 6 months of this year compared to the same time period last year. So that $7 million in credit card crypto rewards and crypto referral incentives, which I'm assuming are still part of the card program. I mean, that's kind of roughly the revenue that they made from the card program. So, I mean, I don't think they're making a lot of money on that card program. So credit card revenue for the first 6 months of this year was a little over $11 million. And that I think includes interest income on that. So yeah, they're not making a lot of money on the cards. So, okay, let's go back to the other aspects of the business, Jimmie. All right. So services, okay, credit card revenue. We've already talked about that.
Mm-hmm.
So first 6 months, $8 million. Staking, okay, roughly $6 million. Custodial fee revenue, roughly $4 million. Okay, so not a lot there. I mean, it's
not much of a change. And any of those, for the staking and custodial, I mean, that was not much of an increase over last year from what they did last year.
No, not at all. Okay, and then they have revenue from they get interest income from their stablecoin. Okay,
right.
That's gone down because yields have gone down. Okay, so first 6 months they got a little under $5 million compared to the same time period last year, a little under $8 million.
Shockingly, I think I know somebody who wrote a paper on that recently.
Yeah, exactly. So, yeah, I mean, look, again, it's it's exchange volume. That's where they get their revenue. You look at these other items, be it staking, be it credit cards, be it institutional custody, interest income on stable coins. Not a lot, and everyone else is doing the same stuff, man.
Yeah.
Okay, we got to get into these related party loans, Jimmie, because this was like a huge freaking red flag for me, and even I had a hard time.
Yeah. Well, the related party loans and the amount of interest that they paid on loans. I mean, but the related party loans. Go ahead, because I know you've already documented a lot of this.
I got the notes here. So there's a couple different loan programs. So these were all done between Gemini and the Winklevoss Capital Fund LLC, which I'm just assuming is wholly owned by the Winklevoss twins, is like their own kind of investment fund, right? Where they put their personal assets. So as of June 30th, the company has a lending agreement with the Winklevoss Capital Fund to borrow an aggregate amount of 133,000 ETH and 10,000 Bitcoin at loan fees between 4 and 8% per annum. As of June 30th, they had outstanding loans of roughly 40,000 ETH and 4,600 Bitcoin outstanding. Okay. And they say the purpose of these lending agreements includes meeting capital reserve requirements of regulators, as well as satisfying obligations under the Galaxy lending agreement. So what they're doing, Jimmie, as far as I could tell, is they're borrowing the company's borrowing the twins' personal crypto stash and using that as collateral with Galaxy and some other lenders to get cash.
That's what it looked like to me.
Right?
Yeah.
To fund themselves, right? I mean, they're losing money. So these are absolutely necessary agreements.
That's the thing at the end of the day, this all sounds, okay, well, it's so big deal that you guys are talking about it and you're going through all these spreadsheets and stuff. This is a company that's never made money. They've got it, and they're paying out more and more and more salaries every year. That money has to come from somewhere, right? This is where it's coming from.
It is. It is where it's coming
this
from.
is really where it's coming from.
They have another loan agreement with Winklevoss Capital Fund. Okay. And that loan agreement is to borrow up to $275 million to be funded in Bitcoin or ETH at a rate of no less than 4% and no greater than 16%. They've borrowed all of that. So they have $275 million remaining outstanding under that loan agreement. They have another term loan agreement with Winklevoss Capital Fund. And that they have 130 million outstanding. Okay. And that got converted into common stock, I believe. So that was a convertible term loan. So that got converted upon the IPO at a discount of 20%. Okay. And there's another convertible note between the Winklevoss Capital Fund and the company. Okay. So look, I mean, I know this is we're getting into the weeds here, but these are substantial transactions.
These are really big numbers. These are big numbers. These are not small.
And, they do note that they have, the board, obviously has a process for overseeing these related party transactions, but it is very obvious that, the twins are what is keeping this company afloat.
Well, and they have all the voting power, right? I mean, they retain that with the Class B shares. So they have what, like 94% of the voting power.
So they have other loan agreements. So they have Galaxy Digital. So they're borrowing from Galaxy Digital. As of June 30th, they had $116 million outstanding under that Galaxy lending agreement. They have another lending agreement with Ripple, actually. There's 75 million outstanding, or no, that's less. Let's see, 42 million. Okay. And then they have this credit card, Jimmie. We talked about the credit card.
Yeah.
So they partner with WebBank. WebBank is a Utah ILC that does a lot of these kind of rent-to-charter relationships. A lot of fintechs work with WebBank. So as part of that agreement with WebBank, okay, Gemini has agreed to purchase, upon request, all the customer receivables from WebBank. Okay.
Yeah.
So that could be depending on how many.
So basically, they're standing it back at the credit card.
Yeah, they're backing the credit card.
Yeah.
So that could be a cash drain of over $90 million, right? So, excuse me there. So look, I mean, not a great business here. By way of comparison, Coinbase, right? So Gemini, as of year-end 2024, 512,000 monthly transacting users, 8.4 million for Coinbase. 8.4 million. Okay, assets on platform. As of year-end 2024, 18.2 billion for Gemini. For Coinbase, 404 billion.
Yeah.
Okay. Let's look at just net income. Okay. A loss for Gemini, as we've noted earlier. Year end 2024, for the full year, they lost $158 million.
Yeah.
For Coinbase, they made $2.6 billion.
Yeah.
Okay. Adjusted EBITDA. They both use adjusted EBITDA. I haven't done an exact comparison if they're excluding the same line items.
That one's a little bit squirrely.
But adjusted EBITDA, as we mentioned earlier, year end 2024 for Gemini, they lost 13 million, and adjusted EBITDA for Coinbase was a positive
Right.
3.3 billion. Okay, so Coinbase is blowing this company out of the water. They're ostensibly doing everything that Gemini is doing, but far greater scale, far greater profitability, and then you add in Base, you add in all the other things they're doing. And I just don't know, again, what the future of this company is other than acquisition.
I was trying to think, what are the prospects here? What are the kind of the best case prospects here for a company like this with, that has this situation? And I mean, that obviously I was thinking about, but I kept thinking, unless somebody was looking, I would think maybe one of the big banks was looking for a way to, I want to come in and I want to do this. The thing is a big bank's not going to operate an exchange. But they can't. And so, because of what they have, I mean, the custody business might be attractive. The credit card business, probably not, but who knows, maybe. They just don't have very much that would seem to be. I mean, Coinbase is never. Why would Coinbase buy them? Right? They're so much bigger, and they don't have like a lock on anything.
Yeah.
For the life of me, I think even acquisition is probably a stretch. Unless it was, like I said, somebody really wanted to get into the business and they were thinking, hey, these guys are already licensed and they have all their stuff set up. But unless you had something really, really innovative that you thought, man, if I had an exchange, I could just take this, and run with it. But you have an expensive company here. I mean, it has a market cap of $2.5 billion.
Yeah. Well, and you mentioned innovation. It's not even clear to me like the innovative parts belong to them per se, because in the risk factors discussion, they note that they rely on third parties.
They rely on a lot of third parties.
So they say we rely on third parties for payment processors and banks, cloud services and data centers for infrastructure, smart contract development and website functionality, and external providers for user support, compliance, and product development. Many or all of these third-party service providers are critical to our operations. And then because they rely on them, they face operational risk associated with any issues at those third parties. So it's like, well, what are you doing? Like what part of the business are you running?
Right.
As opposed to relying on third parties. Was there any other risk factors that stood out to you, Jimmie?
As I went through this, and it's funny, you go through these kind of in detail and you're looking at, all the things there. I mean, a lot of the things were things that we always think about, right? There's like a million things that can.
There's a ton on cybersecurity.
Cybersecurity things.
Cybersecurity was all over.
Cybersecurity came up, in a lot of, and cybersecurity actually came up in connection with the business, and then with the credit card, and this and that, and the next thing. I think they call out the, some of the things that you would expect in policies and things like that. But they did call out one that I wouldn't. I guess they had to, but they probably didn't want to, and that's around the Genius Act and what it did with stablecoins. And so they called that out someplace in the middle of all that stuff. That the risk things that I thought was a little bit unusual, but again, they may have to with regard to the Genius Act was out, and this is one of those cases where that's not going to help you. The Genius Act did not help them, right? Because they had their own stable coin and they were making a fair amount off of that. They're making a lot off of the NII, and then all of a sudden everybody can issue a stable coin. And they said, in there, that one kind of stuck out with me a little bit because I didn't know, I didn't kind of expect to see that that in there. I don't know if there were a lot of other things that around errors that can occur and all kinds of risk issues that are out there just that a lot of businesses are in. But that one kind of kind of stuck out with me.
Yeah, you're right. I mean, they did mention just competition being a risk factor, and you see that at every S1, right? Like competition. But specifically, they called out DEXs and DAOs, okay, which they say may be able to innovate faster and offer products and services that we do not offer.
Right.
They also mention competing with foreign platforms that aren't subject to the same degree of regulation
I wonder who
they
that
are.
could be.
And yeah, exactly. And they do talk about kind of in their history, they were, that they kind of leaned into regulation early on and compliance and whatnot. I mean, that's certainly part of the story that they're trying to tell here. A couple other things that stood out to me in the risk factors, Jimmie, beyond just the standard kind of what you would expect to see in a crypto company, a tech company's S1. They mentioned that, the informal governance of some of these tokens. So they specifically called out Bitcoin, Ethereum, and Solana as relying on core developers. Who, and look, there may be changes or updates that affect the speed, security, usability, or value of these protocols. One that I found interesting is they actually mentioned that the reveal of Satoshi Nakamoto's true identity is a risk factor. Which it's like, well, I mean, I suppose it could be like if he moved his Bitcoin, it's definitely a risk factor. I already mentioned the market makers thing. They mentioned that the talent, the competition for tech talent, and how much that's going to cost them in salary and their insurance coverage. I thought that was really interesting, Jimmie. Okay, because they say we maintain insurance coverage, and this is something that like a lot of kind of industry observers, because clearly they're not disclosing all, everything, and why should they? I mean, that would be a huge mistake. But to what extent, are these platforms insured? And they say, look, our insurance coverage may be insufficient to protect us against losses and costs stemming from security breaches, cyber attacks, other types of unlawful activity or disruptions. Okay, so they may not have enough insurance. That was interesting. And then the final part, Jimmie, that I flagged, did you see that they had a material weakness in their internal control over financial reporting?
Yes, I did see that.
And that was like, wow, okay, not unheard of.
Not unheard of, but
so you always have to read it. And so they spell out, at a high level what the material weakness identified. And it lists a couple of things. The one that stood out to me is that the material weakness identified that controls over the digital asset reconciliation between our internal ledger and the public blockchain to address the existence, recording, and safeguarding of digital assets were not effectively designed and implemented, and therefore did not operate effectively. And then we did not properly design and implement controls over the launch of new products, including controls over the reconciliation of digital assets held in corporate accounts and on behalf of customers. That was a huge red flag.
That one, you know what? I should have written that down because that did kind of worry me, in particular, because one of the things that always comes back to bite firms that can't segregate assets. And that's what this basically said to me was, we can't guarantee we're segregating assets. And I was like, really? Because that's brought down probably more firms than anything else. Is not being able to segregate, not being able to, and not segregating assets for one reason or another. It's like a big deal. You don't want to be in that situation. It's
kind of your job,
especially if something goes south. Because if you can't segregate your assets and something goes south, then claims on the assets are like all over the place, and they're very, very, and these things take years to unwind. I mean, FTX still
happening.
I'll go back one further than that. Lehman.
Yeah, how long did that take?
They're still working on it. Lehman's not going to. That one hasn't been put to bed yet.
I thought they wrapped that up last year. Okay.
No, that hasn't been put to bed. There's still outgoing. There's still things ongoing.
Yeah. This was a real revealing. This was a revealing deficiency, and a lot of folks don't realize that. When you trade on a cryptocurrency exchange, there is not a corresponding blockchain transaction. Okay. Instead, what's happening is that these cryptocurrency exchanges have what they call omnibus wallets on the blockchain, right? And so let's say I place a trade on, in this case, Gemini. Okay. Gemini will match my order with another customer, or it sounds like, given they're S1, a market maker. Okay.
Market maker. Yeah.
And, both of us have pre-funded accounts on Gemini. So they will then just do a corresponding debit and credit entry on their internal ledger, right? A database, Oracle database, whatever it may be, right? Just like, a traditional financial institution. Okay. Now, what you hope and what, is expected is that the company Gemini has access to a sufficient number of Bitcoin and other crypto assets that ties directly to what their internal database says belongs to their customer.
Right.
Right. Okay. And what they're saying here is that they did not have controls to do that reconciliation. Okay. Which is problematic for a lot of reasons. What if there's a run on the exchange? What if they fail? Right. And this was the issue with FTX, which is they were saying, well, look, I had, customers saying, look, I had Bitcoin. I had 10 Bitcoin on FTX. And, they're saying, okay, yes,
really?
but like,
where?
Yeah, exactly. But like, there's no, like it's not on the blockchain, right? Like the company itself doesn't have those 10 Bitcoin on a blockchain. So that was a huge red flag to me. And we've seen this issue flare up in other contexts. I don't want to make more of it than it needs to be, because this is not uncommon to see some of these deficiencies in internal controls. But this one, when you're a crypto exchange, like the nature of this deficiency really stood out to me.
Yeah. Yeah.
So
no, I agree, Lee. I think, there were a lot of things here that, raised kind of, my, I guess, just general wariness about, things. And, I always start out with the balance sheet. I always look at the balance sheet. What's it look like? What's the volumes look like? What are those things? And there was nothing there. Then I kind of look at, okay, so do you have something innovative, something new coming out? I think of like drug companies, especially, companies that are doing biotech. I mean, they typically they're only working on one or two things, and they could run at losses for a long time, but they have this thing down the road. But they, but it was like, there was none of those. And then you saw all these negatives, and it's like, what the heck? I just don't see anything here.
Yeah. Well, I think I know the answer to this, Jimmie, but, is there a price level at which you would invest?
No.
Wow.
No, there is no level at which I don't see any good prospects here. I mean, they're going public in an environment that is becoming more competitive. Their revenues are shrinking. Their trading volumes are shrinking. They have a lot more competition. It's like, there's not a price where I would feel comfortable with this one.
Yeah, certainly not based upon the fundamentals. I think, look, it's not as if fundamentals are driving a lot of stocks these days, though. And certainly in the crypto context, could they ride this kind of wave that we've seen sweep up other crypto related companies? We've talked about the emergence of digital asset treasury companies. Gemini alluded to that in their S1 and saying, well, look, we hope to provide custodial services for some of these digital asset treasury companies. So I think, look, the stock's performance really hinges on whether or not they can, and I think this was smart on their part to distribute a lot of shares to retail. In essence, the gamble seems to be, can we turn this into like a crypto meme stock?
Maybe.
And maybe that's part of changing the name to like Gemini Space Station,
Could be.
But if you looked at the fundamentals, there's no there.
How about you? So I'll turn it around to you. Any price you would look at this one?
I think I would, just because of the factors I previously mentioned around kind of meme stock dynamics in this frothy market. Now, it wouldn't be a buy and hold, but I think if it got down to maybe like $15 or something like that, I could see it being like attractive. If it went too far down, I think people would kind of start to run for the lifeboats, so to speak.
Yeah.
But I just think, given the overall froth in crypto markets for the time being, which I don't expect to continue for that much longer, but I think certainly for the next couple months it'll happen.
I don't know, man. This was one that there's not even a price that I would look at this. I would think about, this seems like a good idea.
Fair point. All right, Jimmie. Well, this concludes our Gemini Space Station Deep Dive S1. I hope folks enjoy it. I know these are not the most maybe entertaining as some of our usual
I don't know.
episodes,
I've
but
gotten a lot of good comments from our S1
good.
reviews.
I think it's a great. I personally enjoy doing it a lot because it gives us a chance to kind of slow down and really just examine, a core business, and how it pertains to crypto. So I think it's critical for folks to generally take a look at these S1s, because there's a lot of hype in crypto, as we know, a lot of stuff put out on social media, but you can't lie in an S1, right? Or if you
No.
do, you're going to get
Well,
prosecuted.
you can, but then
Yeah, but
then
then
you'll
you're in
be
deep.
meeting Lee and I under different
Exactly.
circumstances.
Then you're in deep doo doo if you do. So so S1s, that's where you go to get the truth of a business.
Yeah.
So all right, Jimmie. Well, look, we will do this again in a few days on Friday. We'll go back to our normal format. Although I guess BitGo is teeing up an IPO here, so maybe I have to take a look at that sometime.
Maybe more in the future.
All right, brother. Take care.
All right, you take care.